Welcome, everybody. Welcome to the stream for the day. And the horns of war are sounding. You guys just heard the Uruk-hai horns of war. And we're very fortunate that if you're watching this stream, you're probably not living in a place where you're actually hearing the real horns of war or any of the real effects, right? We're watching the stock market today, and we're not actually watching, any missiles get launched. We're not seeing explosions outside our doors, and we're not watching any of the destruction that's going on in the real world out there. So everyone who's watching the stream, unless you're watching it from Ukraine or Russia, count yourselves very fortunate that we're able to be where we are and not worry about all of the actual issues that are really arising. And, we can just look at stock prices going down and be a little disappointed in that. But over the long term, these stock price decreases will, in my opinion, end up being good buying opportunities. And there's always a bright side to things for us living where we are. Some people are really going through tough stuff right now, though, and that is unfortunate for them. But we cannot do much about it at the moment. So we're just going to cover the stock market and talk about what's going on over there. So Dow futures drop more than 800 points after Russia attacks Ukraine. Crazy stuff, all right? We are in the midst of what's potentially going to be a pretty big drop, right? We might, who knows how far down we're actually going to go. Potentially 400 will act as support for the S&P. We're not quite there yet. We're at 410. That's where we're set to open. So another little drop to 400, a strong psychological level, might act as some support for the S&P. But it's not all bad, all right? There are some upsides. It's not everything that's down, right? You might have been in energy stocks. Anyone who's been holding oil-based stocks is actually doing pretty darn good. Anyone holding gold, you're also doing pretty good. So there are some upsides. You might have been playing the VIX. The VIX is up more than 20%, it looks like. We can actually track that right now just real quick. The VIX from the close is up 18% just about. So big gain on the VIX. A lot of opportunities out there. If you were short on anything, then you were probably making some money. So regardless of whether or not you were short, or if you had any of these stocks that did happen to go up, if you were holding gold or silver or oil, there are opportunities out there, and there are never better opportunities than when the market is down. So we're going to talk about what's causing the market to be down, just some of the news that everyone should probably be aware of, and then some of my opinions on what am I going to do? Am I going to be buying? Am I going to be selling? What am I going to do? Right. So first, Dow futures drop a ton. We already know that stocks are down pretty massively. Anyone who woke up and looked at their brokerage account probably noticed that it had taken a bit of a dip. Some less than others, right? If you were holding many gold stocks or any oil companies, then those probably hedged you against a bit of this decline. So U.S. stock futures fell sharply Thursday as Russia attacked Ukraine, causing global energy prices to jump and sending investors fleeing for the safety of fixed income assets. Joe Biden condemned the attack, saying in a statement that the world hold Russia accountable. Now, that's not quite grammatically correct. I don't know if that's how he said it or if that's a typo, but not quite grammatically correct. He also says Russia alone is responsible for the death and destruction this attack will bring, and the United States and its allies and partners will respond in a united and decisive way. So it sounds like Biden's getting pretty serious about this. He's going to, talk with his allies and partners and see what they're willing to do. So far, it's not been much that they're willing to do. We're going to talk about what Russia's done. Then we're going to talk about what we're hearing from Ukraine and NATO a little bit later. But so far, very smart move on Russia's part. Before this attack actually started, they launched a cyber attack that hit Ukrainian banks and government websites. So several Ukrainian government websites were offline Wednesday as a result of a mass distributed denial of service attack, also known as a DDoS attack. It's when the hacker floods a victim's network or server with traffic so that others are unable to access it. So right before they launched the invasion with their troops and their missiles, they actually launched a cyber attack, and that is probably the future of warfare. We're probably going to see a whole lot more of that, and it's something to watch out for, right? This was hitting banks and government websites, so, potentially a little precursor to a real attack. You might want to watch out in the United States if they start doing cyber attacks on us, if we start interfering with them too much. That's something to watch out for, okay? The source, I will say, of the attack is not yet 100% confirmed, right? But it comes as Russia continues to, or as they continued to build a ton of troops around the Ukrainian border. So that's what they did, the most likely what they did right before the big attack. Now, Russian troops descend on Ukraine as NATO plans to deploy extra forces in Eastern Europe, okay? So, the U.S. will remain in Poland, which is pretty close to this whole situation. But, something funny that I saw this morning when I was reading up on this was, what our response is mostly. Western allies are working to deliver a massive sanction package. Okay? They're working on a massive sanction package, and it's almost like, Russia's in here with tanks and missiles and all kinds of troops on the ground, and I've heard it alluded to what we're doing as, just getting them with a little pea shooter, just pss, 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 just tapping them, sending little pellets on the tanks, with these massive sanctions. It's not really the biggest response. And what's funny about this is I don't think they say it in this story, but it's probably the next one where we talk about oil and the sanctions that they've got going on. Oil prices are up big, right? But what we have going on with oil is, so there are likely going to be massive sanctions, and a second barrage of sanctions is expected shortly, although some analysts believe Western governments will likely exempt energy transactions from the sanctions. So it looks like we're expecting to not include energy and oil in these sanctions, okay? And this is on news that oil prices are up 8% as Russia invades Ukraine. And Brent oil tops $100 for the first time since 2014. The attack is expected to have far-reaching implications for energy markets, given Russia's role as the world's second largest producer of natural gas and one of the world's largest oil-producing nations. So we're potentially going to be exempting these energy transactions from the sanctions, which is funny because if you look at the price of oil, which we'll pull up real quick, we'll pull it up right here, it's gone up pretty significantly. And I've heard that for every 1% increase or $1 increase in the price of oil, Russia gets another about $2 billion a month. All right, that's in oil revenues. So that's what I've heard. And it seems like, this price hike that we just saw in oil that we're expected to open with, if you actually look at the chart, is pretty significant. It's going from around 92 to 99. So that's another maybe $14 billion a month that they're going to be getting per month, right? Just overnight, based off this most recent increase in the price of oil. So oil's getting pretty darn expensive. We're probably going to see fairly massive increases in gas prices. I'm really glad that I filled up the tank yesterday, even though it seemed kind of expensive. It's probably a whole lot more expensive today. Scary stuff to see. This is definitely not going to be good for the inflation situation, which we're going to get into in a little bit. But all in all, rising oil prices are really bad for inflation. They have far-reaching impacts, right? Everything, pretty much, that you consume is transported and produced with oil, right? You use oil to make energy, you use that to produce stuff, you use that to transport stuff, and it is going to make everything more expensive when oil is more expensive, all right? It's not a good sign for inflation. Now, for the Fed, we'll see what the Fed decides to do, right? If the Fed is going to back off because of all this tension and the stock market not doing too good, we'll see what they decide to do about the rate hikes. We'll talk a little bit about that. But I did want to bring up this tweet from, I believe it's the Ukrainian foreign minister. He says, Ukraine has severed diplomatic relations with Russia. I call on all our partners to do the same. By this concrete step, you will demonstrate that you stand by Ukraine and categorically reject the most blatant act of aggression in Europe since World War II. So he is the Minister of Foreign Affairs, and he's calling on all of Ukraine's allies to cut ties with Russia, to stop talking with Russia, and to make a little bit of a statement, right? He doesn't want people working with Russia while Russia's doing all this stuff that is not very good for Ukraine, right? While Russia's invading Ukraine, he doesn't want people to be talking with Russia and being buddy-buddy with Russia, right? He wants people to make a statement and say, Russia, bad, 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 bad. It doesn't seem like he's too hopeful that anyone's coming to help, unfortunately. It doesn't seem like he's hoping that anyone will come to help. He's not calling for any aid, at least not in that tweet. He's just saying, hey, sever your ties with Russia. So at least he's being a little bit realistic, right? I think that if we were going to do a ton to help Ukraine, we would have already done it. But we'll see. So far, though, the story that we saw is that NATO plans to deploy extra forces in Eastern Europe. Now, they don't necessarily specify whether that means in Ukraine or not, right? They might just be on the opposite side of the border of Ukraine, right? On the border that's not with Russia. It might just be that NATO is deploying forces kind of close to Ukraine just in case Russia continues to expand outwards. Who knows? It's most likely just, trying to signal to Russia that, hey, we're sending some troops over, so you better watch out. Now, talking about stocks, right? Stocks obviously down quite a bit. If you look at the chart, we're down quite a bit. Let's see how far down we are on the S&P since we closed. We're down about 2.5%. So it's likely going to be a rough day in the markets. And we can talk about some ways in which this could actually be beneficial, right? If you're looking to short things or if you're looking to go long on things. I'm probably going to make a whole video dedicated to gold today because that has been one of my long-term holdings that I've been, excited to hold throughout this potentially inflationary period and is finally starting to see some love. If you look at the long-term chart of gold, we're finally starting to get back up. We made yearly highs, we made yearly highs today. If you look at the past 180 days, we just blasted through. We're at 184, just about 183 something. And if you look at the past year, that actually brings us to around here on the chart. So we are at yearly highs, 365-day highs for the price of gold. We'll see how much higher we can get. It looks like people are finally flocking to gold. And I'll pull up this little story. Gold jumps to highest level in more than a year as Russia invades Ukraine. So gold is up, and gold is up pretty dramatically. And we'll see how much higher gold can go. Do I think it'll make all-time highs? Well, how high would it actually have to get to do that? If we look at the past 2 years, this was the previous high of the gold ETF at least, right? We'll just use this essentially to equal the price of gold. We'll just assume it does pretty closely percentage-wise. And gold would only have to go up another 5-ish%, maybe 6% to make new all-time highs from where it's at currently. So there is some opportunity in gold, right? People might be jumping on the gold bandwagon. They might be doing it pretty soon. And one way to profit off of gold price increases is not actually to buy gold because you're thinking about it, what's 5 or 6%? And, that's not going to help with your stock market decreases. When you look at some of these stocks, they're down 10% plus. And gold, who cares if it's up 5%, right? You want something more. It's very tough to move the price of gold because look at the market cap of gold. It's the world's largest asset, $12 trillion market cap for gold worldwide. It dwarfs every other asset, right? You could add up all the other assets for the next 5 or 6, and they still don't match up to the price of gold's market cap. So it's very tough to move the price of gold. But what can be done is if you're potentially in gold stocks, right? Gold mining companies, Barrick Gold. GOLD is the ticker symbol for that. That one's up pretty dramatically. It's up a bit, right? It's up from 22 to 23. If you're potentially playing options on these companies, HMY, Harmony Gold, is up a decent amount from 412 to 440. So, a lot of these gold mining companies are moving up much more than what the actual price of gold is going up by. So this is up 7%. So that certainly could have, hedged against some of the stock price decreases that we've been experiencing. But we'll pull back up the gold chart. Gold itself is only up 2.5%. So some of these gold mining stocks have more than doubled the actual gains that gold have seen. So there is some potential in gold. We'll talk a little bit about that later. And another reason why why I was initially in gold, right? I wasn't just buying into it because of this whole Russia situation. I've been buying into it for a while. The United States inflation rate, you can see inflation is becoming dramatic. Now, this could be creating a golden period for gold, right? Because we are experiencing big inflation. We're now in the midst of a very tumultuous time, a war with Russia, right? That's another catalyst that tends to drive up the prices of gold. Whenever there's uncertainty, you typically see people flocking to gold, which is what we're seeing right now. In addition, once again, big inflation. The dollar is being devalued. We're potentially going to see a lot more of this as oil prices jump and as supply chain shortages continue to persist and be a big problem. We could see more and more inflation, and we might actually see the Fed deciding not to taper and to not want to hurt the stock market during this time when it's already experiencing a decent amount of pain. And rate hikes, which the Fed was planning on doing, are actually a negative for gold because then you have to make the choice. Do you want your money sitting in an account earning interest, or do you want it sitting in gold doing nothing, technically, right? So rate hikes are never good for gold's price, typically. At least they're not beneficial on their own, but the lack of rate hikes certainly is, because then you may as well have your money in gold as the potential to move up with inflation instead of just holding dollars. So there are a bunch of different catalysts, and we'll make a video on that later today, just talking about what's going on with gold and some of the catalysts, why it might be going up, why I'm pretty bullish on it, why I'm excited to see it moving up. And, it's not all bright out there, right? I like gold and whatnot, but one thing that I'm not too bullish on at the moment is Russia, right? The Russian ruble hits a record low. Moscow's index down more than 30% on this invasion news. So crazy stuff. The ruble is falling, the Russian stock market is falling, and it was falling so much that Russia actually temporarily suspended trading. All right? So the dollar was up more than 10% against Russia's currency as the day began, sending the ruble to its lowest level ever against the dollar. So the ruble has never been cheaper. Nobody wants Russian money right now because they're very worried about all these sanctions that are getting thrown at Russia. You know, that is a real problem for the Russian stock market, right? If you're talking about real world impact, okay, you know, the sanctions, they'll hurt Russia economically. They'll be annoying for them. Is it really going to stop them from invading Ukraine? Probably not, if that's what they want to do. So in that sense, it is kind of like a little pea shooter against all of these Russian tanks. You know, you're not even denting them. You're just annoying Russia with the sound of those little pellets clinking against the tank's armor. But what it will do is probably hurt the Russian stock market, hurt the Russian currency, and nobody's going to want that stuff, right? Nobody wants Russia's stock. So Moscow's main equities index, the MOEX, fell as much as 45% after trading was temporarily suspended after opening, its worst one-day drop on record. So nobody, it sounds like, is too bullish on Russia. Everyone is worried that Russia is going to be losing money and losing money in a big way. A lot of this likely due to the fears that there are going to be pretty big sanctions out there. People are worried that there are going to be pretty big sanctions, and they're probably right. You know, they're probably right to expect fairly large sanctions on Russia. We're probably going to see that kind of a thing, which, you know, is potentially justified. So all in all, maybe not the worst thing, right? You know, you may as well do that to show the world that you're a little upset. And unfortunately, it doesn't seem like it's going to have too big of an impact because Putin seeks regime change and will likely invade the rest of Ukraine, says a security analyst. It seems like there's not much that we can do other than actually stop them with physical force to stop them from doing this, right? We've already tried talking them out of it. And we've seen the security analyst, what we've heard him say, I think given the size of the force, the rhetoric we've heard about Ukraine overall and its statehood, I think you're going to see him, as in Putin, go all the way and fully invade Ukraine. You know, we already took those two little separatist regions, and now he's moving troops in, launching missiles. You know, there are a bunch of videos on Twitter. I don't know if you guys want to watch those. I'm not sure if we can show those on the channel just because, you know, some people might find it to be disturbing content or whatnot. I'm not sure if we can show those on YouTube, but, you know, it is notable. Russia's already taken these two little regions, and they're on the way to Kiev. I've heard that there are explosions being heard in Kiev, so we'll see what goes on. But this security analyst certainly thinks that we're going to see an invasion, and I defer to him. You know, I'm not a security analyst, so I don't know if we're really going to see him take all of Ukraine over, but the security analyst thinks we are. So he has a little bit more expertise in the area than I do. But, you know, not everyone is disappointed in Russia. You know, so, I mean, I'm not saying that people aren't disappointed, but one key player is kind of taking Russia's side on this. You know, not entirely. They don't want to be too close to Russia, but China refuses to call Russian attacks on Ukraine an invasion and actually deflects blame to the United States. So this is an interesting story that caught my eye, right? Because we're going to talk a little bit more about China and what might be going on in China and areas near China. So this came from the Chinese foreign minister, right? You know, someone who's in charge of talking to people for China, right? The U.S. has been fueling the flame, fanning up the flame. How do they want to put the fire out? So that's what they say about this whole situation. They're basically blaming the U.S. The U.S. has been fueling the flame, fanning the flame, and then leaving this open-ended. How do you want to put the fire out? Or how do they want to put the fire out? And they've also said China is closely following the development of the situation. What you are seeing today is not what we have wished to see. So they are saying that they didn't wish for this invasion of Ukraine because they understand that there are massive sanctions, massive sanctions being placed on Russia. It's not going to be a pretty sight for their economy. Their stock market's down 45%. And they say, we hope all parties can go back to dialogue and negotiations. So they're saying they don't want any kind of conflict. And that's good, right? However, a China expert, right? Tong Zhao, a China expert, has said China is clearly sympathetic to Russian perspectives. He says China thinks that it's the NATO expansion and other threats from the US and NATO that ultimately prompted Russia to defend its legitimate interests, he said. Okay? In other words, I think China feels Russia feels it is good, or it is forced to do what it is doing. All right, so this expert thinks that China feels Russia is being forced to do what it's doing, and because Russia is now receiving wide international condemnation and criticism, I think China wants to avoid being seen as a part of this. So basically, this China expert is saying, China is sympathetic to Russia. They're not going to call this thing an invasion. They don't want to bash Russia too hard, but they also, at the same time, do not want to be seen as being on the side of Russia. They don't want to get sanctioned themselves. They don't want massive criticism from the world because they provide a lot of goods, and they don't want that to end, right? They want to continue being able to engage in trade and make a lot of money being China. And this whole Russia situation, it does bring up a bit of a worrying topic. And you can actually see what that topic is. I don't even have to tell you. It's number 3 trending on Twitter. Number 1 is Ukraine, obviously. Number 2, for whatever reason, is SFF Pit. I don't know what that is. Fantasy and science fiction writers pitch their finished novels in a single tweet. All right. I don't know why that's trending. But number 3 is Taiwan. Okay? A lot of people are worried about Taiwan. A lot of people think that Taiwan is the next area that's going to get attacked. They see Russia moving into Ukraine. Russia's wanted Ukraine for a while. They're moving in. It doesn't seem like anyone is really putting up too much of a fight or trying to stop them. And people are worried that China is going to take this as a sign that there's not going to be any resistance if they start moving into Taiwan. So we'll take a peek at this. This kind of scary story. Taiwan's Air Force scrambles to warn away 9 Chinese aircraft that enter its air defense zone. Taiwan's defense ministry says on the same day that Russia invades Ukraine. So scary stuff to see. 40 minutes ago we heard about this. So it looks like there are Chinese aircraft that are kind of poking at Taiwan, similar to how Russia started poking at Ukraine. So it's a scary thing to see. It's certainly not what we want to see. We've also got this little tweet from Ben Shapiro. He says, 2020, China takes Hong Kong. The West does nothing. 2021, the Taliban are handed Afghanistan by the West. 2022, Russia takes Ukraine. The West is in retreat, and everyone with half a brain knows that Taiwan is next on the menu. It's quite possible, right? It's quite possible that Taiwan would be next on the menu. It seems like a likely target. It seems like the kind of place that China would love to get their hands on. They've certainly talked about it a decent amount. And, we'll see what happens with that whole situation. But it's scary to see. Now, here's what we've got coming out, this morning. China just announced Taiwan is not Ukraine and is an inalienable part of China. All right? So they're literally just saying that, Taiwan, no, that's different from Ukraine. That's part of us. And, this could be a big prelude to them moving the troops in. They say, buckle up. We may have a second invasion coming, this one far more significant because no one in the world respects Joe Biden or his leadership team. This is coming from Clay Travis. I'm not sure who Clay Travis is, but that's what Clay Travis has to say about it. And we'll see what happens with Taiwan and Ukraine. It seems like a scary situation. Ukraine is already in a big catastrophe. In Taiwan, we certainly don't want that to be next. Taiwan is a big semiconductor producer. Unfortunately for semiconductors, a lot of the metals that we use in those do come from the Russia and Ukraine region. So that's absolutely not what we want to be seeing. And, I'll tell you the funny story very briefly of how I found out that this whole invasion was going down. It happened last night, pretty close to when it actually started. And, I was just actually sitting right here where I currently am. I was playing a game, just with a friend. I was playing a game, and I looked over at my phone because I heard it buzz, and I got a little notification from Robinhood, of all places. It said, Bitcoin down 10%. And I was looking at that. I was like, what the heck happened to Bitcoin? Some fool must have sold all their Bitcoin, and it's crashing the price. And then I got another notification right then, Ethereum down 10%. And I was like, that's weird. Maybe there's some kind of crypto crash going on. And then I got another notification, Dogecoin down 10%. And I was like, all right, something real is going on. So I checked out the news and heard about this whole Russia and Ukraine situation. And boy, oh boy, cryptos were really the first to be hit. I mean, you can see are down today massively, down 24 over the past 24 hours. Bitcoin's currently down 8.5%. It's recovered a little bit from the lows. Ethereum down almost 12%. BNB down 11%. Ripple down 13%. Cardano down over 16%. Dogecoin down over 16%. And Shiba Inu down almost 20%. So some of the riskier meme tokens are certainly falling a lot more than the mainstream cryptos like Bitcoin and Ethereum. In fact, Bitcoin is falling one of the least. It's actually the lowest decline over the past 24 hours until spot number 22 when you get to Tron tokens. So, other than the stable coins like Tether and USDC. So Bitcoin falling quite a bit, and scary to see. Look at this. Are we making new lows in this? We're not quite making new lows, I'll say, on Bitcoin in this overall downtrend that we've been on over the past couple of months. We're not quite making new lows, but it is certainly not too safe at the moment, right? It has big declines that have occurred, much bigger than what's occurred in the stock market. And Ethereum, it looks like, have we hit new lows on Ethereum? Yes, it looks like we have on this decline. No, not quite. We'd have to decline about $100 more to hit new lows on Ethereum. But scary stuff. Scary stuff for a lot of these cryptos. They're moving down in big ways. And that's not to say that they're doomed, right? Obviously, they're pretty risky assets. A lot of people were hoping that cryptos would act as risk hedges, similar to gold. But it looks like gold is the only thing that's acting like gold out there, right? People are buying into gold when they're fearful, and they're getting out of those riskier assets like cryptos, like stocks. They're pumping up the VIX, right? The VIX is pumping up. The dollar's pumping up. You can see on the yearly chart, the dollar is having a massive day today. It's moving up big. We're potentially going to make new highs on the dollar as people flee to cash. People are fleeing to cash right now. They want to get in on dollars. They want to sell their stocks. They want to sell everything with risk. And that's a move. That's a move you can make. It's not my favorite move. It's not the move that I'm making. I'm certainly not selling anything, right? I'd rather hold the stuff and hold it over the long term, right? And eventually, unless the world ends, unless the United States falls out of, the number one spot or even the number two spot, we could still see really great stuff for the stock market in the future. And I would expect that we will in just a couple of months, right? Depending on how long this lasts. I expect that once this whole crisis is kind of contained, and once we actually know what's going on, one way or the other, I would expect the stock market to move up. Now, that's not a guarantee. It's not financial advice. It's just my opinion. But my thoughts on the issue are that the markets really don't like uncertainty. And once we know what's actually going to happen, once we know whether or not we're going to war with Ukraine or with Russia, and what's going on with China and Taiwan, and one way or the other, either it's good news or it's bad news. Either we're not going to war and there's going to be peace and nobody's going to invade anything anymore, or it's bad news and they've taken over and those countries are no longer countries. They're just part of the bigger countries of China and Russia. One way or the other, I see stocks going up at the end of that once we alleviate some of the uncertainty that's going on, because in time, things will get back to normal. We'll be able to normalize the supply chains, and some things may continue to be higher in price for a bit. Oil might continue to be higher in price. Wheat might continue to be higher in price. Now, the reason that is because Russia and Ukraine combined produce and export, I believe, 29% of the world's wheat. So they are massive wheat exporters. They also have a bunch of natural gas and oil. And, they do produce quite a bit of that stuff. And those things could perpetually be a little bit higher. If you give one country more control, then they have a little bit more decision-making power. They can decide to release slightly less oil to keep the price high. They could certainly benefit pretty greatly from that. Notably, the United States does not import Russian oil. In fact, the United States does import Russian oil. The United States does import Russian oil, and there is, in fact, oil headed to the U.S. as we speak. So gas prices are not looking good. However, while Europe imports a large share of its natural gas from Russia, the U.S. is a net exporter of natural gas, and any spillover effect on U.S. gas prices should be modest. So natural gas and energy, so electricity pretty much, shouldn't be going up all that much, right? In the U.S. at least. In Europe, they certainly could. Gas prices in the U.S. could go up a significant amount. They do import Russian oil. However, the Western analysts are expecting Western governments will likely exempt energy transactions from the sanctions. So we're going to see what happens with all of these sanctions that are being placed on Russia, supposedly, these massive sanctions that Boris Johnson's talking about, placing massive sanctions on Russia. I think we have it right here. I think he said it right here, the massive sanctions. Where did he say this? There's so many news stories now. Yeah. So Western allies are working to deliver a massive sanction package after Russia unleashed war. And just, look at the disparity between these two things in quotations. Unleashed war and massive sanctions. What are the sanctions really going to do to help Ukraine in the meantime, right? They'll punish Russia after the fact. But clearly, this is something Russia is willing to do despite the sanctions, right? They haven't pulled out the troops and said, run away, the sanctions are on the way. We got to get out of here real quick. They're not really retreating because of the sanctions. And, it's something that will, over the long term, if you're just looking at it from an economic standpoint, despite the sanctions, there will probably be a benefit to Russia from this whole situation. They'll probably be benefiting. And all in all, if they do take over a decent amount of Ukraine, then they can get all that wheat, they can get all that oil, they can get all that natural gas, become a whole lot more powerful, economically significant, and it's going to be a good thing for them strategically. So I don't think they're too worried about the sanctions. I think the sanctions are an annoyance. They're causing their stock market to fall a little bit. They're causing their currency to become worth a little bit less. And, that's too bad for them in the short term. But overall, the sanctions really aren't, the strongest move that we could be making. And let me find this story real quick for you guys. It's an interesting story. All right, here's okay. So the market opened just a couple of minutes ago. You can see we're moving up a little bit. So all in all, good stuff. Hopefully, we're going to continue doing that. But here's an interesting story you guys might appreciate. Trump again praises Putin moments before Russia launches invasion of Ukraine. So this is Trump talking, and this is probably the first time that he's glad he's not president, having to make these choices because he seems to be enjoying sitting where he's at. He says, he's taking over a country. Okay, so this is Trump talking about Putin. He says, he's taking over a country for $2 worth of sanctions. Trump said, I'd say that's pretty smart. He's taking over a country, literally a vast location, a great piece of land with a lot of people, and just walking right in. So this is basically Trump praising Putin, saying that what he's doing is really smart, that he says, I think this is what Trump is saying. He says, this is genius, he said on a radio program. So Putin is now saying it's independent, a large section of Ukraine. I said, how smart is that? And he's going to go in and be a peacekeeper. We could use that on our southern border. That's the strongest peace force I've ever seen. There are more army tanks than I've ever seen. They're going to keep peace all right. So that's Trump's view on it, right? He says, good job, Putin. And you're doing pretty good. And I got to say, he's right about these $2 worth of sanctions. Maybe the sanctions will be bigger than what we're thinking. Maybe the sanctions will really have a negative impact on Russia and Ukraine. But at the moment, at least, it seems like it's a pretty tough situation for Ukraine and a fairly beneficial situation for Russia. And Trump's calling that out a little bit. Now, we can see gold up almost 2%, silver up about 2%. A lot of energy stocks are notably up fairly significantly. CEI, a big energy stock that we used to talk about on the channel, was a short squeeze stock, up 37%. It had a big gain yesterday, and it's up 36% today. Let's check the short interest real quick on CEI stock, because this was a big short squeeze stock that we were interested in way back when. And we're just about to check the short interest on it. So CEI currently sitting at a 12% short interest. Let's see. So fairly significant. Above 10% is fairly significant. 27 million shares short. Some of these shorts may end up getting squeezed out. So if you're interested in a little energy stock play, potentially CEI is something to keep an eye on, right? It did have a whole lot more shorts when people were worried about the big short squeeze. But since then it's declined. A lot of shorts ended up covering when the price went down. They made a decent profit on that. And there's still some shorts in there, though. But with this whole Russia situation, I'm sure shorts are not happy to see that oil and oil companies are moving up dramatically. Now, unfortunately, no stocks are really immune from the big declines that we've seen. The only things that are up that I'm seeing are the dollar, gold, silver stocks, the VIX, and some oil companies. And then Clove, for some reason, Clove is up I'm sure, okay, on their earnings, they're up. Look at that. So they're immune. They're the one company that we're watching that's immune. But everything is down. DWAC, down, hitting the $80 support. We're going to see if we can hold it there. Sundial's down in a big way, but is rebounding sharply, actually, throughout the course of the initial trading hours. So we're up a couple of cents. And hopefully we'll rebound. It looks like the stock market is making a little bit of a comeback. People might have decided these are the lows, right? We know Russia's taking over Ukraine now. Maybe there's a little bit less uncertainty. They know maybe some people have just come to accept the fact that, hey, Russia's going to move into Ukraine. That's the way it's going to be. Let's buy up some stocks. So I would overall, and we've been saying this the whole time, view this whole situation as a buying opportunity. We'll pull out the chart. This whole situation, I think, is a buying opportunity. I don't think that it's a reason to sell all of your stocks. We're looking at all of this, pretty much how long we've been talking about it. I think this big decline, buying opportunity. I don't think that we're going to see, a massive crash due to this. It's possible we could move a little bit lower, but over the course of the next year, do I think we're going to be higher or lower than where we are now? I would see us moving higher. And, something that I would worry about is the dollar. I would worry about the dollar being higher or lower than where it is now. I'd say the dollar's probably on the way down, if I had to guess. I would say the dollar's probably going to be moving down over the course of the next year. There's no guarantee. I would be pretty bullish on gold as well. I think that gold, silver, oil, it's tough for me to be bullish on over the long term, but over the short term, it certainly seems to be doing pretty well. And look at this beautiful gain on Sundial. It's just shooting right back up to where it was. It's down just about as much as the market is. So it's even though it's a slightly riskier stock, people aren't viewing it as too much riskier. We'll see what happens with it throughout the course of the day, though. But it's good to see that stocks are recovering a little bit, right? People were very worried about how much they would be falling. And let's see what's going on with cryptos. Are cryptos recovering? So Bitcoin, since the market opened, is it's not doing too much. It's pretty much staying the same. We're not getting any crazy price movements in Bitcoin. However, if strength is shown to be flowing back into the markets, then we could start to see cryptos moving up as well. And, maybe this is the bottom. Maybe it's not. Maybe it's the beginning of the crash. I know a lot of people are expecting that. But, at the same time, how much lower do you really want these stocks to go, right? They've fallen at this point, let's see, from the highs of the SPY to the lows, down about 15%, 14.5% to be more precise. They've fallen quite a ways. And, we've seen a bunch of stocks fall a decent amount. We'll pull up IWM. The Russells is down a decent amount. The QQQ is probably down the most. It's probably down, let's see, from the highs previously to the lows. It's down 21%. So the QQQ is officially in a bear market territory. The Russells from the highs to the lows has certainly entered bear market territory. 22.93%. So, yeah, a lot of the growth stocks are down pretty big. But notably, we're seeing some green today. And it's not a guarantee that that's going to persist throughout the whole day. That could certainly evaporate. We could certainly start moving down big. It's my suspicion that a lot of people happen to be watching the market and noticed, whoa, we just had a big decline in stocks. And some people are now nibbling at the stock market. Now, it's not a guarantee that we're just going to shoot up, but it is a potential indication if we do see really good stuff today, a lot of green. If we see a decent amount of green in the after hours and pre-market, that could be an indication we've hit the bottom. Typically, when you hit the bottom, what I've seen in my personal experience is that you tend to hit it very, very briefly. You tend to not sit at the bottom for very long. People see prices on stocks that they like quite a bit, and they buy into them. Now, the reason people might be buying into stocks, why they might start buying into stocks, is we were already at incredibly depressed levels stock price-wise. All right, stocks had fallen so very much over the past couple of weeks and past couple of months, really. And we can pull up this, which, if you guys are interested in, it's posted to the locals community as well. But here's a little chart of stocks that were down 65% plus. And this didn't even come out today, right? A lot of stocks are down 10% today. So this list would surely have to be updated. And a lot of these stocks would be down a whole lot more than what they're currently down. But you can see that there are already massive quantities of stocks that are down massively. Over a third of the NASDAQ is down 50% or more. Probably over half of the NASDAQ is down 50% or more at this point. A lot of stocks have fallen very far away from their highs. And people are looking at the valuations that we've gotten to and are potentially saying, hey, there's some money to be made here. There's a lot of potential to be made in the stock market. And what when do I want to be buying, right? Do they want to be buying when things are on the up and up, or do they want to buy at peak fear when people are worried? There are literal missiles flying over Ukraine, there are tanks moving in, there are troops charging. That's probably, when some people want to be buying. So that might be one reason why we're seeing a little bit of buying pressure today. Now, it's not a guarantee that it's going to persist. There's certainly a lot of fear out there. A lot of people might decide to start selling, and that wouldn't be ideal. That's not typically what you want, but that's, a situation that we might have to look at. People might start selling off a little bit more, and certainly possible. There's no guarantee that that's not going to happen. You never know when you're actually at the bottom. It's pretty much impossible to pick the bottom. Sometimes you can do it if you're using a support or resistance level, but even then, it's just guesswork, right? You're typically, there's going to be one ticker where the bottom is actually being hit, and have we hit it yet or not? Maybe we have, but it would be easy for us to move down 0.5% more and make new lows on this thing. So by no means are we guaranteed to be at the bottom, but I do think that regardless, over the course of the next year, this is probably lower than where we're going to be. So I would expect to see us at some point, at this time in 2023, fairly higher in market overall, right? Especially certain stocks that have other catalysts that you guys know are coming for them. More cannabis-related stocks, legalization. I don't see why this should throw a damper on legalization. I would still expect that to occur at some point this year. And for any traders out there, there sure are some stocks that are making quite a big profit for you. If you were in CEI as of the close of yesterday, up 54%. So there's certainly, if you were playing the options on CEI, then all the better, right? All the better if you're playing the options. They're probably up dramatically. There certainly was some money to be made out there. And the VIX also up big, right? The VIX is still up big despite falling as the markets actually started to recover a little bit instead of just crashing. It's exactly what we want to see. We don't want to see the market just open up and blood red. We don't want to see us moving down and down and down. And all in all, it's a scary situation, but for the markets, in my opinion, buying opportunity. A lot of people are saying, sell because war and whatnot. And if you really think that this war is going to cause a massive crash in stocks and whatnot, it's probably because the US and Russia, you're expecting, would be going to war with each other, in which case, the world could be pretty much over, right? We could see the end of the world with a bunch of nukes flying in the air. In which case, why do you care about how your stock portfolio is doing if the world is really going to end? That's my opinion on it, at least, right? I'm hoping for the best. And, it's always important to hedge yourself a little bit, right? You should have a diversified portfolio. I am in no way saying that I think everyone should be buying up all the stocks they can with all the cash they've got. I always think it makes some sense to have cash on hand, especially, if there's any money that you're going to need over the next year or so. You should definitely have, cash for that, right? You shouldn't be worried about what's going to happen with your stock market portfolio, because that's going to cause you to make bad decisions in the future. If you end up putting too much money in and you do end up having to worry about what's going on with your market portfolio and whether or not you're going to have enough money to survive or whatnot, you definitely shouldn't worry about that kind of a thing. You always want to have a well-diversified portfolio, in my opinion. You always want to have a decent amount of cash on hand. And you never want to be in a situation where you have to sell a stock to make ends meet or to survive. That's just not a good situation to be looking at. And NJ, thank you very much, NJ. Thank you for the super chat. Thank you. So all in all, I think we're seeing decent stuff with the market, as good as can be expected, right? Down 2.5% just about on the SPY. A lot of stocks down more than that. But the fact that we're not seeing blood red from this open, the fact that we're not just plummeting, is good to see, right? I'm not the most bullish on stocks, right? I wouldn't necessarily be making short-term call option plays, betting that stocks are about to pump up big, but that's certainly a possibility, right? There's the possibility that stocks will be moving up in a decent way. And, if there was something that I would want to be buying into right now, which I might, I'll think about it. I never like to make decisions very quickly. It would potentially be gold. Gold is something that I've been in for a long time. I already have a decent amount of gold holdings. I might want to consider putting some short-term money into gold-related call options. And the reason is a lot of people are showing that they now have faith in gold. This is the first time, in my opinion, in the past year that we've really seen a lot of people flocking to gold over the past week or two. During this whole crisis, people have been flocking to gold in a fairly significant way. And that is showing strength in gold, right? During a period where we are expecting to have massive inflation, okay? This is the real worry, the real reason that gold might be going up in a somewhat significant way. Keep in mind, none of this is financial advice. I'm not recommending anyone make any moves. I'm just telling you guys what I'm thinking about. We have seen inflation rise dramatically, and we're looking at a three-pronged situation where gold could be going up for a couple of reasons. One, obviously, inflation. Inflation's a big deal. Inflation is almost certainly, in the next couple of weeks and months, going to be getting a whole lot worse, especially, despite what's going on. If you just ignored the whole Russia situation, we were probably going to see higher inflation. We were probably going to see inflation eke higher. However, due to this whole Russia situation, the whole Russia crisis, and the increase in the price of oil, which has now hit highs since 2014, they're at all-time highs since 2014. Oil prices jumped 8% today alone. We're probably going to see much more significant inflation. I mean, commodities are going crazy. You're talking about wheat. Wheat's getting expensive. All kinds of things are getting expensive. Russia and Ukraine produce 29% of the world's wheat. So if there's real crisis there, if missiles are getting launched, fields are getting burned, then we might see a lot less wheat. And inflation is certainly going to take a spike to the upside. Now, that's reason number one, why we might expect gold to be getting more expensive, why gold might be the play right now, at least for the next couple of weeks and months. It might be a good idea to maybe get some short-term exposure to gold, just my personal opinion, but that's reason number one. Reason number two, we can talk about the Fed. All right, the Fed has been threatening to raise interest rates. They're talking about raising rates to combat inflation, and while some might expect, all right, now that inflation is potentially going to be getting a whole lot worse, doesn't the Fed want to raise rates even more? Don't they want to make it an even stricter economic environment? Reason they might not wish to do that is actually because the market's crashing, right? The market's down pretty significantly. The Fed knows that raising rates is only going to, make the market a little bit more fearful. There are already a lot of fears out there that things are going to get worse, that money's going to be tougher to come by, that stocks are going to move down. And the last thing the Fed wants to do is crash the market. They might actually decide to accept a slightly or, a very much higher rate of inflation than they initially wanted due to the stock market performing relatively poorly. They might decide not to taper as much and not to raise rates as much. We'll have to see what Jerome Powell has to say about that. There's no guarantees what he's going to say, but we'll see what he says. It could be good stuff, and hopefully it will be. But that's reason number two, why we might see gold prices moving up. Gold is already doing pretty darn good, right? Gold is already jumping to its highest level in more than a year on these Russia tensions, and these Russia tensions are the third reason why gold might be doing pretty darn good in the future, because during times of worry and fear, a lot of people do tend to flock to gold. And, some people are probably flocking to it right now. You can see it's obviously up a decent amount today, though during the actual trading hours, it has fallen a bit as the market has actually started to recover, as people are becoming a little bit less fearful. And, that's possible. It could just continue to fade away on these fears being alleviated, but still, it is actually fairly significantly up, right? It's up about 1.5%, which is very significant for gold, considering the fact that it is the world's largest asset by market cap, currently with a $12 trillion market cap. Any gain in the price of gold is going to be very significant market cap-wise, right? Any percentage gain is moving billions, tens of billions, hundreds of billions of dollars worth of market cap in one direction or the other. So gold, while it's tough to move, people are certainly flocking to it right now as a safety asset, which is strengthening the narrative that gold is going to be a safe haven against tough times. And it really helps gold out that Bitcoin and cryptos have actually been falling during these inflationary times and during these periods where people are worried about world-ending situations. It looks like over the past couple of months, as people have been more and more worried about inflation, Bitcoin has been moving down. As people have been more and more worried about Russia, Bitcoin has also been moving down. Gold, on the other hand, if you look over the past 30 days, it's been going up and up and up. So it is overall really strengthening the narrative that gold has a lot going for it, and potentially getting some people to realize, all right, people were saying Bitcoin is digital gold, it's the replacement for gold. And at the end of the day, what really matters for whether or not Bitcoin is going to be digital gold is whether or not it acts like digital gold, and whether or not it goes up when gold goes up, or if it goes up when inflation fears are high and when worldwide tensions and geopolitical risk is very high, it ends up going down. It's shown, at least currently. Maybe it can eventually turn into something that will go up along with geopolitical risk and inflation fears. But so far, gold is really showing itself to be the asset that's been doing that. So all in all, gold is performing incredibly well. We're seeing really good stuff on the gold front. I'm glad that I was in gold, and it certainly hedged my portfolio fairly well. I was hardly down today. I'm sure a lot of people, I was definitely not down 10%. I was down maybe 1 or 2% because of all the gold holdings and some energy stocks that I was holding. So it really did a good job of hedging my portfolio. And on this little dip, it's a trade that I'm considering taking, maybe getting in to some more gold, right? Maybe getting a little bit of additional gold exposure. It's something I've been bullish on for a long time. It's cheaper than it was when I first started buying it. Probably around here, peak fear, of course, I jumped into gold, but I did average down when it got cheaper. And now that it's moving up, it's looking like it really has the potential to make new all-time highs if we continue along this fearful track. Now, there is reason why we might see a little bit more fear in the markets. And we've already talked very briefly about this, but we will discuss it a little bit more because of this right here, because of China and their refusal to call the Russian attack on Ukraine an invasion. This is just a little piece of the story that's making people very worried, all right? A lot of people are very fearful about China, and you can actually see Taiwan is the number 3 trending topic right here. It really should be the number 2. There are a whole lot more tweets about Taiwan than there are about SFF Pit, whatever the heck that is. But the number 1 is Ukraine, and number 3 is Taiwan. People are worried that China is going to be making a move on Taiwan. And, you can actually see that, we'll pull up a larger version of it. We got it right here. Taiwan's Air Force scrambles to warn away 9 Chinese aircraft that enter its air defense zone, Taiwan's defense ministry says, on the same day that Russia invades Ukraine. So China is potentially making moves on Ukraine. They're potentially thinking about some kind of invasion and taking it over. And Ben Shapiro actually has something to say about this. He says, 2020, China takes Hong Kong. The West does nothing. 2021, the Taliban are handed Afghanistan by the West. 2022, Russia takes Ukraine. The West is in retreat, and everyone with half a brain knows that Taiwan is next on the menu. If I had to think of a place that I thought would be getting invaded next, if a place was to get invaded, it would be Taiwan, right? That's been the long-standing place that China wants to take over. And it makes sense that they might decide to make a move right around now. Now, we've also got this news coming out from Clay Travis. I'm not sure who he is, but he says, China just announced Taiwan is not Ukraine. Now, that sounds good at surface value. You might be thinking, all right, China says Taiwan's not Ukraine, nothing to worry about, right? They're not going to invade like Russia's doing Ukraine. And if you then continue reading this tweet, it actually gets a whole lot worse. They say China just announced Taiwan is not Ukraine and is an inalienable part of China. Okay, so that certainly doesn't sound good. It certainly sounds like China is talking about, they're not talking about invading Ukraine. They're talking about taking what's already theirs, according to them. They wouldn't even view it as an invasion. They think Ukraine, or they think that Taiwan is already theirs. They're just planning on moving right into it and taking over. A lot of people, most people would probably view it as an invasion. They'd probably view it as China taking over Taiwan. You've got a map of it right here. Taiwan is this little island next to China, and I don't know if anyone's kept up with the issue, but it's long, been fought over territory, not with physical force, but the United States has typically been Taiwan's protector, and China has never recognized them as a country. They always say that they're just part of China, similar to what they're doing with Hong Kong, right? They don't like that there's this little island right next to them, right off their coast, that is not under their control, that the United States can potentially use as a strategic location. And they don't like that, right? They want also all of the economic activity that goes through Taiwan. They want more of a monopoly on semiconductors and all that. Taiwan certainly has some big semiconductor plays out there, right? They have some big semiconductor companies, and people are certainly worried about Taiwan being taken next. And it's a real possibility that we'll have to watch out for, all right? It is something to think about. And that's another reason why, if we see yet another invasion, if people start moving into Taiwan, if China starts putting their forces in there, then we could see a real threat for the stock market again. That could have a fairly significant impact on supply chains. Sure, we get a decent amount of the metals that we use for semiconductors from Ukraine and Russia, but a lot of the semiconductors that we actually get are from Taiwan, and that's going to be tough for us, right? We're already in the supply chain crunch, and if we do end up losing a lot of these semiconductors to China's control, right? They could have a little bit more of a monopoly on it. They could end up charging a bit more for those, and that could certainly make the stock market perform a little bit worse. So it's a tough situation out there. Another reason why people might be flocking to more risk-averse assets, right? More risk-on assets or risk-off assets, such as gold, right? People tend to flock to that when there's a lot of fear in the market, and gold has certainly been performing pretty well. It could continue to perform well for those reasons that we just talked about, right? The three, for those of you who weren't watching that whole spiel: inflation, Fed potentially not raising interest rates as much as expected due to the stock market not doing too good, and three, the Russia-Ukraine threat, the China-Taiwan threat, a lot of uncertainty in the world, a lot of uncertainty in potentially the currencies that could be printed. You know, we always tend to print a lot of currency during war, so the dollar might be getting devalued. We're already living in a relatively high inflation environment. And, you see inflation's already been shooting up. This is before any of this worry. And it was certainly before this big spike in the price of oil, right? If you look at oil prices, let's pull that up. Look at how much oil prices have spiked just today over the past, 10 hours or so. Oil prices just shot straight up. Let's take a look at the 3-month chart of oil prices. They've been going up dramatically. So oil prices are skyrocketing. That's going to have far-reaching impacts on the prices of all goods. As oil gets more expensive, I've been preaching this, guys. As oil gets more expensive, you see the prices of producing goods get more expensive because energy costs are always involved in producing goods, and you're also going to see the cost of transporting anything. Even stuff that doesn't use oil to produce it is typically transported in trucks, which use gasoline, which is affected by the price of oil. And as transportation costs go up, so do prices, right? So we're probably going to see a whole bunch more inflation coming down the pipeline. Gold is a big play that I've been a fan of for a while. I'm actually glad that we're getting a little respite, a little pullback in the price of gold at the moment. That's very good, I think, for potentially buying opportunity. It's something that I'm going to look at throughout the course of the day. I really don't like making big decisions super quickly because it's very easy to get caught up in the hype. And to think, oh man, the world is ending, China's going to invade Taiwan, Russia's invading Ukraine, oil prices are skyrocketing, we're going to see all this inflation. It's very easy to get caught up in the hype. I'm not trying to hype anyone in to jumping into gold. I'm just explaining the bull case for gold. And I'll explain the bear case. The bear case is, gold doesn't do anything. It just sits in a vault, right? So, who wants it, right? There's no use for it. It's some archaic means of storing value. That's another argument against gold. But at the moment, gold is looking pretty good. So I'm trying to balance the pros and the cons of gold at the moment. Another bear case for gold is, at the moment, we haven't heard anything about the Fed definitely lowering interest rate or keeping interest rates low, right? We haven't heard any definitive news on that. They might decide to continue with their proposed plan of raising rates and raising them pretty significantly. That wouldn't be the most bullish for gold. I'm not sure if it would be the biggest detriment, though. And the reason why is when you're looking at, we'll pull back up the inflation chart. When you're looking at the inflation rate and what the Fed is going to do to interest rates, you have to consider what are the real rates going to be, right? If the Fed is going to raise rates by 0.5%, or even if they raise it, let's say, by 3%, well, what's the real interest rate on that? The nominal rate, if they raise it to 3, is 3. That's the nominal rate. That's what they say. It's the rate in name. But if you actually look at what the real interest rate, when inflation is 7.5%, the real interest rate is inflation, and we'll make a little chart on this. We'll actually draw it out for you. Here's a little chart for anyone who is curious. So we've got real interest rates, nominal rate. Let's just say it's 3%. Inflation rate. Let's say that's what it actually is, at least at the moment, according to the CPI, 7.5%. Real rate. Okay, so we want to calculate the real rate, guys. If anyone knows how to do this, then you're in for a treat, because so do I. The real rate is just going to be the inflation rate minus the nominal rate. So you'd actually have 4.5%. we'd have a 4.5%, or sorry, a negative 4.5% real rate, because it's 3 minus 7.5. So that's what real rates would be if the Fed raised interest rates to 3%. They are only expected to raise them to maybe 0.5%, maybe by the end of the year 1.5%, tops, maybe 2% tops. They're not thinking about 3%, guys. So we're all in all looking at a real situation where the real inflation rate is going to be, or the real interest rate is going to be pretty darn low. It's still going to be negative. I'm not too worried about Russia, about interest rates devaluing gold. I think that overall we're going to see real rates remain pretty low. I would expect that inflation would actually continue rising and get pretty darn hot by the end of this year. I would expect that we would see a whole lot more inflation, especially in the next couple of CPI readings. That's what I would think, at least. And, we'll see what happens with it. So this is typically the time when we would end the stream, and we will do it. But hold on, guys. We actually want to check and see Biden speaking, maybe. Hold on. Let's see if Biden is speaking. No, we won't bother with it. All right, guys. So that was the stream for the day. If you enjoyed, feel free to subscribe to the channel. Feel free to hit the like button or hit the rumble button. Subscribe to the channel for sure, though, because we do these streams every morning at 9. We cover whatever's going on in the markets. It just happened that we covered, mostly Russia and Ukraine, because that's the biggest news that's going on right now. So if you guys appreciate that, feel free to subscribe. Thank you for joining. It was a tumultuous day in the markets. We're seeing a lot of red, but there are some potential opportunities out there. Watch out for a video on gold coming out today. I'm going to consolidate my thoughts and think a little bit more about it, potentially be making a play on gold. We'll see what goes on. So other than that, guys, have a great day. See you in the next stream. Don't forget, if you guys are interested in joining the locals community, it's down below in the link, top link in description. You can join for free. See a lot of free posts. We certainly post a lot of stuff to the locals community pretty much daily, so feel free to do that as well. And other than that, guys, have a great day. Be grateful that you're not in Ukraine or in Russia, or maybe in Taiwan, right? So I'll see you guys in the next one.